to have you join us today. Hello and welcome to Business Daily. I'm Lee in Seoul. We have a lot on our plate today, so let's get started with the day's highlights. South Korean firms operating in the Kaesong Industrial Complex hold an emergency meeting calling for government compensation over the park's closure. Technology is getting smarter, meaning more work for robots in place of humans. Various reports say that technology could eliminate millions of jobs in the near future and that Korea is no exception. The global equity rout is deepening, and Korea is no exception. The benchmark Kospi dropped nearly 1.5% after plunging just 2.9% yesterday, and the secondary bourse saw some heat today. For more on this, we have our Hong Jae standing by. So what happened on the Kosdaq?
Yoon, as you mentioned, the tech-heavy Kosdaq today saw shares nosedive just before launch, shedding as much as 8% on major losses from some of its major players. This triggered a sidecar, which is like a circuit breaker that suspends share transactions for 1 minute. The bourse closed down 6% at the end of trade. Over in Japan, the Nikkei closed down over 5% to below the psychologically important 15,000 mark. This comes after the S&P 500 overnight fell 1.2% to its lowest close in almost 2 years and down over 10% for the year.
So what's prompting this extreme volatility?
It's the slowing global economy that has already been threatening Korea and the rest of the world for quite a time now. The slowdown in China, as well as other emerging markets, coupled with faltering crude oil prices, have darkened the global economic outlook. Sentiment was further subdued after Fed Chair Janet Yellen recently expressed concerns about the U.S. economy. Now, the recent rout across global shares is also stemming from worries over how central banks' monetary easing policies will impact the markets. The Bank of Japan and the European Central Bank have introduced negative interest rates, and investors remain concerned that these extreme policies may be losing steam and challenging the bottom line of banks' earnings. Financial shares actually led the recent losses in world markets.
Now, concerns are mounting over whether such volatility in equity markets will have larger implications down the line. What are we expecting here?
And it's true that some are worried about the possibility of a major financial crisis like the one that we saw back in 2008. And since many economists are not expecting the world economy to regain strong recovery momentum anytime soon, these sentiments are further being bolstered. But whether the global rout we're seeing right now will really turn out to be another financial crisis still remains to be in question. And one expert that I spoke to does not expect that kind of situation.
Financial institutions are in better shape in terms of financial health compared to the past, and that means it can handle more losses.
He added that the volatility now would mainly come from emerging markets, whereas the rout during the 2008 global financial crisis was triggered by advanced economies like the United States, and that's why he believes it's less likely the situation will spill over to the global economy. But experts in general do agree that policymakers should keep a close eye on the situation, as nothing is really foreseeable in times like now. Tune.
Meanwhile, U.S. Fed Chair Janet Yellen has conceded the possibility of a future downturn and left the door open to negative interest rates as recession fears are mounting in the United States. Our Oh Soo-young has this report.
Negative interest rates are not off the table. That's what Chairman to the U.S. Federal Reserve Janet Yellen said on Thursday during a semi-annual testimony at Congress. Yellen revealed that the Fed is re-examining the possibility of introducing negative interest rates after making sure that they would be workable in the US, should banks go south. This comes as fears of a recession in the world's largest economy are mounting, following global economic troubles and widespread market sell-offs. While acknowledging the protracted slump across markets, Yellen denied the Fed's rate hike is to blame for the current market meltdown of stocks and oil prices. The Fed raised its interest rate in December for the first time in almost a decade and forecast 4 additional hikes this year. Given the weakening global economy and market volatility, investors were skeptical that the Fed would follow through with its projections. But Yellen said that backtracking on a gradual rate hike is not what she considers the most likely scenario, reiterating the necessity of raising interest rates to keep tabs on inflation.
Still, ongoing employment gains and faster wage growth should support the growth of real incomes and therefore consumer spending. And global economic growth should pick up over time, supported by highly accommodative monetary policies abroad.
However, Yellen said it was uncertain when energy prices and the dollar would stabilize. On Thursday, global oil prices slipped even further, with March futures for West Texas Intermediate tumbling 4.5% to a 13-year low during the trading session. Oh Soo-young, Business Daily.
After the shutdown of the inter-Korean Kaesong Industrial Complex, South Korea said it has cut off all electricity and water supplies that go into the industrial zone. This was shortly after all 280 South Korean workers safely vacated the industrial park on Thursday evening. The Ministry of Unification said this was in response to the North having kicked out South Korean employees and freezing all assets of companies operating there. This is the first time that Seoul has cut all power from the factory. The Kaesong Industrial Complex employed about 55,000 North Koreans who worked for 124 small and mid-sized South Korean manufacturers. An emergency meeting has been held at the Corporate Association of Kaesong Industrial Complex, which represents South Korean firms operating in the industrial park. They've launched an emergency planning committee and are demanding that the South Korean government compensate for the damages caused by the sudden suspension. And now we have our Kim Min-ji on the line from the association's headquarters in Seoul. Min-ji, what can you tell us?
Hyun, the meeting ended about 3 hours ago, and representatives from some 120 South Korean companies with production facilities at the Kaesong Industrial Complex met to discuss what many here refer to as a dire situation. The association said that the sole responsibility lies with the government and that it should provide compensation for the losses they will face. And should it fail to do so, the association said it could take legal action in the worst-case scenario. The association also urged the industrial park to be restored swiftly, saying it's a symbol of peaceful coexistence and inter-Korean cooperation. Now, earlier in the day, South Korea's Unification Ministry said it will try its best to provide swift and sufficient support for the companies. And some of the support measures include extending repayment periods for the loans they receive from the Inter-Korean Cooperation Fund, and as well as pushing back the time period companies have to pay their utility bills.
Still, for the business owners, their livelihoods are on the line here, as some are solely based in Kaesong, so their business would have gone from normal to non-existent. So what kind of losses are the owners facing?
Well, back in 2013, when the complex was shut down for some 160 days, South Korean firms reported a combined loss of over 1 trillion won, which is over $830 million US. Now, the association says it plans to put together a special team to assess the damages companies are likely to suffer, as well as make compensation demands to the government. The companies, in fact, say actual damages could be greater as the losses incurred from losing business partners and credibility. And on top of that, as North Korea has frozen all assets, companies had to leave the industrial complex empty-handed. The association requested that company representatives be allowed to enter North Korea to reclaim finished products and raw materials to reduce the losses. This has been Kim Min-ji reporting from the Corporate Association of the Kaesong Industrial Complex.
And these emergency meetings are going on after a very stressful series of developments for the owners of South Korean firms in Kaesong. For a wrap-up of what went down on Thursday, here's our Kim Ji-yeon.
Tension was palpable in the 29 hours between the time Seoul announced it was shutting down operations at the Kaesong Industrial Complex and the final South Korean crossed the border into the south. At first, all seemed well when North Korea agreed to Seoul's plan. South Korean businessmen were able to take as many goods and materials as they could to try to minimize the damage. The return of the South Koreans was going smoothly on Thursday morning, with one group after the other evacuated every 30 minutes. But the atmosphere changed in the afternoon when North Korea gave all the South Koreans 40 minutes to get out of the factory park. They were also told no belongings could be taken. Those who had been desperately trying to salvage what they could were forced to leave empty-handed.
I don't know what to do now. I couldn't bring anything back with me. I had to slip out while I was packing things up.
For one day, South Korean businessmen at the Kaesong Industrial Complex had a taste of what it might be like if the two Koreas were at war, due to the rapid expulsion and the confiscation of their assets. Kim Jeon, Business Daily.
Korea's overall government debt has been increasing at a rapid pace, with the debt burden of the central government ticking up $48 billion as of the end of November compared to a year ago. According to the finance ministry, this puts the debt load at $463 billion. The ministry says this is mainly due to the increase in outstanding treasury and national housing bonds. In terms of overall national debt for 2015, including that of local governments, the debt burden is expected to stand at $490 billion, according to the National Assembly Budget Office. Official numbers will be finalized in April after related data is submitted to the Board of Audit and Inspection. The Budget Office projects total government debt will go beyond the $530 billion mark by the end of the year. Korea's trade minister has pledged further government support for Korean firms looking to enter the Iranian market. Ju Hyung-hwan said in a meeting with a number of these companies that the government is reviewing various financial support systems, such as establishing interbank export loans. Interbank loans would establish credit lines between the state-run Korea Exim Bank and banks in Iran and offer loans for local companies doing business with Korean counterparts. He added that a ministerial-level meeting is planned for later this month to open new business ties. Korea joined other countries in lifting sanctions against Iran last month, and Tehran claims to have secured access to frozen funds of more than $100 billion from sanctions relief, which could spur massive investment. Kia Motors has unveiled its first hybrid subcompact SUV, Niro, at the Chicago Auto Show. The Niro is the first Korean-made eco-friendly SUV, and get this, its name is a combination of the words near zero emissions and hero. According to company officials, the new vehicle meets the demands of the fast-growing subcompact crossover utility vehicle market. The Niro boasts a fuel efficiency of about 21.5 kilometers per liter, and Kia Motors says it aims to sell 65,000 units of its eco-friendly SUV worldwide in the coming years. Where is the future of jobs? One research institute has issued a rather pessimistic outlook, saying that more than half of the jobs here in Korea will be wiped out by advanced technology. And our Eunice Kim takes a look at the areas expected to take the biggest hit.
The warnings have been issued. In 2013, Oxford University researchers said 47% of U.S. jobs could be scrapped by automation technology in 3 decades. Last year, the Bank of England projected up to 15 million jobs in the UK were threatened by robots. And just last month, a Davos report said jobs of 7 million people would be lost due to disruptive technological advances over the next 5 years, affecting 15 major global economies. Then what about Korea? In a recent study, the government-funded Korea Labor Institute said more than half of jobs in Korea faced at least a 70% chance of being replaced by computers. Among those most at risk were posts in apparel and textiles at 85% and sales and marketing at 84.7%. Jobs the report said Korea had many of compared to countries like the U.S. With an eye on college students, the study found university majors related to medicine, education, and engineering were more resilient, with vulnerability ratios below 50%, while those in social sciences and humanities fared worse. Researchers urge the government to boost high-skilled jobs, as currently their ratio is less than half of that of the U.S. Separately, the Education Ministry had pushed policies to raise the quota of engineering majors, while cutting the quota of humanities and social sciences. On this, Labor Institute research fellow Kim Se-eum noted creativity that keeps humans ahead of high-tech robots is nurtured by study of the arts and culture. As such, he called on the government to create jobs in the arts and humanities too, to keep their value alive. Eunice Kim, Business Daily.
And that wraps it up for today and this week. Thanks so much for watching, and we'll be back next week at the same time, same place for your Business Daily. Until then, goodbye.